In today's video, I'll be going over game theory and how game theory related to trading. So I leverage game theory into my trading as I think of a game of strategy, deception, and probability. At the end, it's a probability game, and the same principle is used within poker, chess, war, and how you can understand how to play the game better and give yourself an edge. But first, let's dive into what is game theory. So game theory is a study of strategic decision making that focus on people, player, how they choose action, and then their outcome depending on everyone's behaviors and choices. But in this, when it comes to trading, it really only comes down to your choices, right? You're the only player in this game, so we'll dive into that. And mainly, like I said, this is used in economics, politics, anything in our daily life. You will see game theory when you have player between player. And then when it comes to trading, it's a zero-sum game. There's always going to be a winner and there's always going to be a loser. And the winner will get paid with whatever currency that you pay, you trade with, and then the loser, you lose your capital as a tuition. Okay, now jumping into 5 core elements that we're really focused on diving into game theory that we'll focus on that ties into trading. One, we need to understand player, who is involved in this case, like trader, companies, nation, athletes. Next is the strategy. We need to be able to understand the choices based on the understanding rules, and based on the rules, we make the strategy that align, that give us an edge, and give us the highest probability of winning. Okay. Next, we need to understand how is the payoff, what is the outcome, what is the reward. In this case, it will just be a profit, survival of the market, market share, or whatever you're trading. And then next thing is information. So knowing what each player knows, and then also what's hidden, what's not hidden, what we know, how we can apply that as a additional information to our trading. Next thing is rules. Of course, you need to understand the rule of the game to play the game. So you need to perfectly understand what you're dealing with and how you can leverage the rule in your favor. Okay. Now jump into what we just went through and how that ties in with day trading or if you're a swing trader, doesn't matter. So players is essentially you versus other market participant. So you have hedge fund, algos, institutional buyers, and then you have other retail players, and then you have yourself as well. You also consider competing yourself from a psychological standpoint. Strategy, very simple. We can either buy, sell, which is wait. And then other two is just the sizing and risk management, which is very, very important. That really ties in with your own self. And then you have the payoffs. So your reward is your profit or your losses. And then you have your psychological edge, discipline, and patience. Information right off the bat, you're already at disadvantage. You don't have any additional more information than the institution. Institution always have additional more, not a lot more. In today's world, in tradings, everything is very public. 80%, I would say, even 90%, you have the same information as institutional players, right? The only thing is insider information. Obviously, that's something we don't have. Those are their advantage. That's something that we cannot acquire as a retail trader. And the next thing we have disadvantage is just if you want to play the scalping game when it comes to playing low latency scalping game, you will never win against the algo. Algo will always be faster on transaction. And then next thing is the rules. You need to understand market auction theory, and all the liquidities that applies to here. Understand how the price move to really understand where is entry going to be and when's the right time to enter. So in short, game theory when it comes to trading work already. You should know this right off the bat. We're competing with incomplete information, so we're already at a very high disadvantage compared to institution. One, we don't have the capital, and then two, we don't have the resources to do so. So when it comes to game theory and trading, it really comes down to survivability. How can you repeat a certain action multiple times and increase that probability when there's no certainties, right? So now let's dive into a couple models that I want to jump into. So there's a lot more model when it comes to game theory, but we only cover this 4 that is ties into trading. One is person dilemma. So when it comes to game theory, majority of the time, human behavior will always cooperate. Cooperation will always give you an edge and higher um, winning chance when it comes to any game you play. Just due to you can share information, you have more leverage when it comes to cooperation. But there are things that we need to keep in mind is whenever there is a betrayal within a group, they typically lead to multiple betrayals. So one person betrayed will lead to multiple people getting punished, and this will start snowballing very, very fast. Something we need to keep in mind. And then Nash equilibrium is very simple, essentially stable outcome that you cannot be changed. The outcome cannot be changed solely by one person or one strategy alone. It needs to be a majority. So for example, when trading, if you have 10 buyer, one seller, it's still going to go up. It won't go down, right? There's a majority win. Chicken game, who blinks first, essentially whoever makes the first action takes the first action. We need to understand this when it comes to trading is don't be the first one to try to catch the top or catch the bottom because you're not institution. You don't have that type of leverage or funds, enough capital to swing the market in any way. So when it comes to chicken game, don't be the first one to act. You want to wait until the institution step in. The next thing is very important is a repeatable game. We need to understand we're playing a game that's repeatable, not just once. So you're facing the same situation multiple times and you have the same condition and same player every single time. So you need to keep that in mind. It's not a one single game. Now let's go into how this game theory, different lessons or theory models apply to trading. Prison dilemma ties in with discipline and FOMO. So essentially is when it comes to prison dilemma, when it comes to trading for retail trader, there's no other player. You're the only players when it comes to this game. So only thing that you need to focus on is your decision making and how does that decision making will affect you long term. So for example, you need to come up with consistent rules that you can follow, a strict rule that you can follow that you don't derail when it comes to times that your motion is waver. So right off the bat, that if you're a beginner trader, a lot of time you don't have too much rules and you're still in the process of setting up the rules, you will see a lot of FOMOs, revenge trade, and those things are only short-term dopamine. So, but in the long term, it will ruin your account. So, the solution for it, you need to build strict restriction rule that you can cooperate with your system. So there's not going to be one betrayals within your system. So again, you're playing against yourself. There's no other players. You're playing against yourself every single day. New day, new players, and your only players. You need to create that long-term systems that you can follow. That will help you dominate the system. And the game itself would increase a higher probability of win rate. Next thing is the Nash equilibrium. So a good strategy essentially you need to find is you won't deviate, so you need to have a clear guidance. So wherever you journal and you have certain criteria, you need to write it down and understand, start refining them to the point where you don't deviate. You understand when the trade is coming, when it's not coming, when to wait. One simple strategy that you can repeat multiple times that create a equilibrium strategies and stable strategies that you won't waver when one day is off, but the next day you're back in the game. There's no waiver when it comes to FOMOing or revenge trading on one day. Okay, there's always an outlier, but majority of time you want to stay within an equilibrium range. Next thing is the chicken game. So this is very, as we mentioned, when we comes to trading as a retail trader, we have no edge. So don't ever be the first one trying to snipe the top or catch and try to long the bottom. There's no way you can, maybe one or twice you'll get it right, but overall this is a probability game. Over 100 trade you will be wrong most of the time, right? You want to let institution show their hand first and then we wait. So once we get confirmation, that's when we step in. Don't be the first one, and also don't be the one catching the falling knife. Okay, next one is a repeatable game. You need to understand this is not one trade and it's game over. You need to repeat your edge over 100 trades, collect stats, understand the R multiples, win rate, stability, expectancy. All that stats need to be collected and understand that what is your outcome of the game. So for example, in my case, I know I will never take more than 3 consecutive losses over the past course of 2 years of tracking my stats. I'd never take more than 3 days of consecutive losses. So I give myself 10 plus trades that I can take. So essentially I can take losses back to back to back to back, and my account still won't blow up, right? Now that's a repeatable edge, right? My probability win rate is high. My R multiple is more than 1-to-1. That give me a, just mathematically, that I will always be profitable at the end of the day, okay? Since we're playing the long game. Now we want to jump into why in game theory and when it comes to cheating, and you cannot win by cheating because there's no way for you to cheat. And simply put, in institution, they have the speed, they have the size, they have additional information, dark pool, order flow that you do not see. And we don't have the edge for that. So they can cheat in their own way, in their ways, but obviously they're playing a different game as compared to retail. If you're a VC firm, you play a much different game theory compared to retail trader. And retail trader is very, very simple. You're mainly playing the game with your own self, the players with your own self, and then you have the order and retail, and then obviously you're not really playing against institution because you can't play against institution. And next thing is realizing that you can never win by trading the news. So if you're trying to predict the news, trading as the news release, drawing FOMC, CPI, PPI, sure, you can get it right a couple times, but those are straight gambling. You need to understand those are not your edge, okay? And then obviously scalping ultra low latency, you'll always lose because you can never win against the algo based on speed. So your rule, your edge is only when it comes to designing a rule where you let the big player reveal their intention, reveal their hand, and then you act. We're in the game of not predictions because we don't have enough information to predict. We're in the game of reaction, okay? We react based on the big player institution to reveal their hand first, and we're not the first one, like we mentioned, the chicken game. We're not the first one to make the decision. We wait, and then we make our decision. That has the highest probability, okay? One key note, think like you're a small predator in the jungle and survive by spotting patterns that is repeatable, not just go straight up and to wrestle the ball and wrestling the lions, okay? You'll never win on if you play the game like VC firm, because you're not a VC firm, you're not institution. You can never win by playing the same way they play. Okay. Now we have understanding what is game theory and how it's applied to trading. Now let's jump into how can we formulate a winning strategy. And then, as I mentioned, this is a solo strategy because this is a one-player game. At least from our perspective, when it comes to retail, you can compete institution. Most of the case you're competing with other retail trader. Okay, so one is defining a bigger picture. The bigger picture and the higher time frame that give us the daily bias, and if you're a swing trader, you're looking at the weekly and also the daily, right? Much higher. You need to understand where is the current market structure that is going, either it's in the sell market structure or buy market structure. You need to understand that by understanding the higher time frame bias. The second is within the higher time frame, you need to identify the point of interest. What that means is within that point of interest is your high probability, right? Over courses of journaling, right? Where is the high probability that you will see some sort of reaction where the institution most likely will step in? Those are your high probability trades, right? Within those once you identify those high probability, then you start looking for confluence, which we dive into the third point, that we wait for confirmation. We don't predict. We let the institution to show who's in control, either buy side or the sell side, and then we follow the trend, right? We don't try to pick the top. We don't try to buy the bottom. We let the institution show their hand first, and then we use that as information and enter our trade with higher probability within the point of interest that we have highlighted or we have drawn out and join the higher time frame. The next thing is design this as a risk like a game designer. You need to understand each trade, each bet is a bet, and it's not going to be a one single bet. It's going to be 10 bet, 100 bet, 1,000 bet, right? You have 10 trade, 100 trade, 1,000 trade. It's not just one single trade. So you need to manage your account, how much you're risking and how much your target for your R multiples, because you want to be able to stay in the game long enough to see biases and patterns where it favors you in the certain market condition, and that's when you go in, right? And when it comes to trading and as a retail trader, is really a solo game of just rules and patience, nothing else. Information, you have the same as institution, you don't have any more. You don't have any more than other retail trader. Only things you have is your rules and patience. That's your true edge. Okay, next, the last one is exploiting the retail bias. So again, you need to recognize, for a new beginner trader, you need to recognize when you're over trading, when you're FOMOing, when even there's no trade, we're just trying to put on a trade just to put on some trade. Okay, you need to understand your edge. Again, come from your patience, your rules, journaling, and also waiting for a high probability setup to come to you. You want to be a sniper. Wait for the trade to come. You let the prey to come to you. You don't want to chase it. Okay, you want to set yourself up at the highest probability and only have one shot, one bullet. You want to take that shot at the highest win rate. Okay. All right, now let's wrap up for today's videos. So in conclusion, as we cover, when it comes to retail trader, you are at disadvantage. Now the question is, does that mean you can even be profitable? And when it comes to a lot of when finance firm or VC firm, they will always tell you, don't day trade or don't swing trade because you will never be able to beat the institution, which they are 100% correct. Do not be stubborn and think that you can beat them and then you can be profitable. Like I said, only 90% of the trader in the market are profitable. And that reason is not because it's not doable, because it's hard. And also a lot of times when it comes to retail trader, a lot of it is your mindset. A lot of it is your psychology. A lot of it is rule and condition that most cases when you start off right away within the first 6 months, I can guarantee you don't have those rules defined enough. Most of the pro trader that has been in the game for long enough, they understand it takes 2 years to refine at least an edge that they can confidently say, I can do this repeated day in and day out, years after years, at least 2 years. I can give you that. Now understand that you have the chance of winning, but really when it comes down to it, there are a couple things to remember, that you are not in the game of prediction. You're in the game of pattern recognition. You're in the game of reaction. Okay, you want to react when the other side, the big players, show their hand, and then and when the payoff is skewing your favor, that's when you act. You don't play every single round. You can fold, right? When it's just like poker, sometimes you can, when you see your hands, it's not good. When the market condition is not good, you can choose to not trade. Only trade whenever you have better hands. And then design your rules to be able to make rational choices and be patient to understand when is your edge highest probability versus when is low probability based on market condition. These are the things that you need to take a lot of journaling, a lot of screen time, experience to formulate these idea, and also train your human psychology to do the opposite. From human behavior, we always want to quick, not able to wait. You need to fight those urge. And how do you fight those urge? You need to come up with discipline and rules to bound you within a safe environment where you can make rational decision instead of in the urgency where typically you're in emotional states that you will have temptation, you will FOMO, you'll make the wrong decision majority of time. Okay, wrap up. Make the market a repeatable game for you that you can cooperate with your own system and beating the temptation to cheat yourself. At the end of the day, this is a game with yourself. Don't think of it as a game with multiple players, because you cannot win against institution. So you don't even bother. You're trying to win against institution because you're not playing against institution. And truthfully, institution is not there to look for your liquidity. Institution is not there for that. You're too small of a fish for you to care. Majority of the time, you're playing a game with yourself. Majority of it's mental. Majority of it's you not waiting patient enough. Just wait for the institution to show their hand first, the big player to show their hand first. All right. So to wrap up, hopefully this gives you some psychological psychology standpoints on how you can tie game theory into your tradings. And then, like I said, this is a zero-sum game. When you win, there's always a loser at the other end, and most of the time, those losers are the retail trader. It's not institution. That's just how it is.